USD or ZAR forecast US dollar goes to war with Israeli rain. Ukraine remains under attack. US dollar benefits from safe haven appeal. USD or ZAR grapples with channel support as EM. Emerging market currencies remain vulnerable. Commodity prices support the South African rand despite a rise geopolitical risks. Visit DailyFX Education to discover how to trade the impact of politics on global markets. Rand resilience holds firm despite elevated geopolitical risks. USD strength has recently weighed on the volatile rand as the war between Russia and Ukraine remains at the forefront of risk sentiment. Despite a fairly optimistic South African budget speech earlier this week, a shift in the global geopolitical environment prevented the USD or ZAR from falling below the key psychological level of 5,000 as investors fled to the safe haven dollar. Given an increase in the severity of sanctions imposed against Russia and its President Putin, the invasion of the Ukraine capital has raised additional concerns over supply constraints which have already exacerbated the effects of rising inflation. However, unlike other emerging market currencies who have succumbed to the pressure of safe haven trade retreat, commodity-rich South Africa has remained fairly competitive against the greenback as a surge in the price of metals supports the ZAR. USD or ZAR technical analysis, after temporarily falling below 5,000 earlier this month, the global fundamental backdrop has allowed USD bulls to retaliate, driving price action back towards the lower bound of the longer-term channel while threatening the upper bound of the short-term bearish channel. USD or ZAR weekly chart prepared by Tammy Da Costa using trading view. As the key psychological levels of 5,000 and 6,000, 16,000 remain as critical support and resistance for the imminent move. The 50 and 200-day MA moving average is currently supporting price action, pushing the pair into a potential zone of condition. Chart prepared by Tammy Da Costa provides the information. Yeah, this is the provide of the information. Tomorrow brings the feed, and Friday brings NFP. It will be a busy rest of the week around the US dollar. The greenback put in a strong bullish move after the September rate decision, and tomorrow is expected to bring a taper announcement, but that already appears to be priced in. What else can Fed say to feed USD bulls, and will Powell tip his hand towards or a more hawkish outlook in the December summary? It's long been expected that is the rate decision at which the Fed will announce their intention to begin tapering asset persists. Many market participants were looking for that announcement at the September rate decision. Instead, Powell said that the significant further progress that the bank wanted to see hadn't yet been met on the employment front, even though inflation was sticking above 5%. Powell said the bank was ready to make the taper announcement soon, provided that employment data didn't massively disappoint. And global markets largely inferred that to mid-November. The Fed did, however, upgrade their economic projections to highlight a potential rate hike in 2022. Since then rates markets have continued to run and are now closer to pricing a second rate hike for next year. And the expectation for a taper announcement appears to be priced in at this point, with the focal point now moving the Fed's rate hike plans for next year, and whether K think they all need to use in faster pace of hikes to start stemming inflation. The US dollar shot higher on the back of the September rate decision, rushing up to the first yearly hike and eventually finding resistance at the 38.2% Fibonacci retracement of the last year's sell-off. This led to some ranging price action in early October, with one more attempt to break out to a fresh hike mid-month, only for prices to slide back to trendline support last week, at a spot that was confluent with the 23.6% retracement of the recent topside move. Friday brought a big response to that confluence support as bulls hit the bid and USD put in a bullish engulfing formation. So far this week, the bullish trend has softened as prices have pulled back to support. The US dollar bigger picture, taking a step back on the chart, and we can get some greater reference around range level. That 38.2% retracement of last year's sales of held resistance for 3 consecutive weeks until eventually peers were able to push down to a fresh monthly low. But that's around the time that confluence support came into play on Friday, leading to a strong continuation move that pretty much made the week for the greenback. Can buyers finally price out this Fibonacci resistance? And what will the Fed need to say to make that happen, considering that a taper announcement already appears to be priced in? Likely, the bank will need to warm a faster rate hikes next year to meet the moves that have been showing in US rates. and that could bring some further